Okay, picture this. You're maybe on a beach in the Bahamas. Sun's just coming up, right? And you're already done with work by, say, 10 a.m.
Sounds nice.
Yeah. You've made your money for the day, and now you've got the freedom, the flexibility to do whatever you want. That's kind of the dream they sell about day trading, isn't it?
It really is the alluring picture, but the sources dive right into the reality check pretty quickly.
Right.
While those perks can be real if you actually succeed, day trading has this incredibly steep learning curve. And it's super competitive.
Right. It's not just easy money.
No, definitely not a get-rich-quick thing. It's a profession. And get this, the statistic is pretty sobering. Only about 16% of day traders are actually profitable after their first 6 months.
Wow, 16%. That's a tough hurdle.
It's a brutal entry barrier, yeah.
Okay, so that's exactly why we're doing this deep dive today. We're digging into Andrew Aziz's book, How to Day Trade for a Living.
Good one.
Our mission here is to give you a really clear understanding of the core ideas, the principles that might actually help someone navigate this complex world. Think of it like getting the essential strategies, the ones that could give you a real edge.
Makes sense. A roadmap, kind of.
Exactly. So let's unpack this. Where do we start? Find your battlefield.
Yeah, that's a good place. First off, what makes a day trader different is they're out of their positions by the end of the day, right? We're not talking long-term holds.
Quick out.
Precisely. Capturing those short-term price moves. And like Andrew Aziz stresses, a day trader is really only as good as the stocks they choose to trade, the best ones. He calls them stocks in play.
Stocks in play.
Oh, yeah.
I like that. It sounds active, intentional. So what actually makes a stock in play? What are we looking for?
Well, there are three main things he points out. First, they need high relative volume.
Meaning they're being traded way more than usual.
Exactly. Significantly more. That high volume is key because it means, a day trader can get in and out fast, easily, without their own trade messing up the price too much.
So liquidity is paramount.
Yeah.
You need to be able to slip in and out without making waves yourself.
Absolutely critical. That quick entry and exit, it's non-negotiable for these short trades. Second, they need a fundamental catalyst.
Okay, like what?
Think a big earnings report, maybe a merger announcement, a major product launch, getting a huge contract, something tangible, something newsworthy that's driving all that unusual interest and activity.
So there's a reason the stock is moving like crazy.
Yes, a reason for it to move independently. Which brings us to the third point. Independence.
Independence, meaning?
Meaning these stocks should be trading based on their own news, their own catalyst, not just because, say, the whole market is up or their specific sector is down.
Gotcha. You want a stock with its own unique momentum.
Precisely. And Aziz, he actually uses pre-market scanners and real-time intraday scanners to find these. He's often just watching 2 or 3 really good candidates a day.
Only 2 or 3? That sounds focused.
Super focused. Across 3 screens, apparently, his approach is described almost like guerrilla warfare. You wait, find the perfect moment, strike fast, and get out even faster.
So skipping this step, not identifying these stocks in play, it's like you're just guessing, really, flying blind.
Totally. It's the difference between just hoping a stock moves and having a strategic reason to believe this specific stock might move in a way you can trade. It's about finding those high probability targets.
Setting yourself up for success from the start. Okay, so that focus makes sense, especially thinking back to that scary statistic. Only 16% making it past 6 months.
Right. And that stat perfectly highlights the #1 goal for any new day trader. Just survive. Live to trade another day.
Survive first, profit later.
Exactly. Which makes risk management absolutely paramount. You can't profit if you're knocked out of the game.
Okay, this feels like the most critical piece then, especially with those odds. How do you actually survive? What's the golden rule here?
It's surprisingly simple, but incredibly powerful. It's called the 2% rule.
The 2% rule. Okay.
Never risk more than 2% of your total trading capital on any single trade. That's it.
Just 2%. That sounds small.
It sounds small, but think about it. It allows you to be wrong quite a few times, and you will be wrong, especially starting out without completely blowing up your account. You survive the learning curve.
Right, so even a string of losses doesn't wipe you out.
Exactly. The book gives this example, you don't want a $1,000 loss on a small account, and you definitely don't want a $5,000 loss. The rule forces you to get out of the trade when it hits your predefined risk limit. No questions asked.
It sounds simple on paper, but I imagine sticking to that. Like when a trade is moving against you fast, emotions running high, that must be the hard part.
Oh, absolutely. That's where the psychology kicks in, big time. Sticking to your rules under pressure is maybe the hardest part of trading.
Yeah, I can see that.
And tied into this is the idea of seeking asymmetry. You want trades where you're risking, say, cents to potentially make dollar.
Favorable risk reward.
Exactly. The book mentions risking maybe $100 for a potential $1,000 gain. It touches on something called a favorable R multiple, but we don't need to get lost in jargon now. The core idea is simple. Aim for potential wins that are significantly larger than your potential losses.
Makes sense. Maximize upside, strictly limit downside.
That's the essence. And that 2% rule, it's probably the single most vital principle for protecting your capital, ensuring you actually last long enough in this volatile field to maybe become one of that profitable 16%.
Okay, so let's say you've found your stocks in play. You've got your 2% rule locked down tight. Now what? How do you actually decide when to buy or sell? It's all about reading that tug of war between buyers and sellers, isn't it?
It really is. You're trying to figure out who's winning that battle right now and bet on them. Andrew Aziz actually says day trading, at its heart, is a study of mass psychology.
Mass psychology. Interesting. So how do you read that?
The best tool for that, according to Aziz, is candlestick charts.
Ah, the candlesticks, those red and green bars you always see.
Exactly. They're not just random bars. They visually represent the fight between the buying bulls and the selling bears over a specific time frame. Could be hourly, 5-minute, even 1-minute charts for day traders.
So the shape and color tell a story.
Absolutely. A hollow or often green candlestick means positive price action. The buyers won that round, and the height shows by how much.
Buyers in control.
Right. Then a filled, often red candlestick means the sellers won, price went down. A big red one might even signal panic selling.
Sellers dumping shares.
Could be. And then sometimes you see a really thin candle, almost just a line. That's an indecision candlestick. Minor price change, the battle was basically a draw.
A stalemate.
Exactly. And crucially, a good chart always includes trading volume for each candlestick, each time frame.
Why is volume so important?
Volume is like a confirmation, or sometimes a warning. If you see a huge price move on really low volume, maybe it's not that significant. But if you see high volume accompanying a sharp move, or even high volume on one of those indecision candles,
That tells you something interesting is happening.
yes, it signals intense participation, a real battle. High volume highlights situations a day trader should pay close attention to. It complements the price action.
Okay, so candlesticks aren't just lines. They're like a visual language for market sentiment. And volume adds context. You're seeing the battle and how many soldiers are fighting.
That's a great way to put it. You're reading the psychology visually.
All right, so once you can read the candles, what strategies does Aziz recommend? You mentioned he prefers simplicity.
Yeah, he's not a fan of overly complicated chart patterns with, crazy names like the abandoned baby or the 3 black crows.
Chuckles. Yeah, I've heard some weird ones.
Right. He thinks that stuff can lead to subjectivity, seeing patterns that aren't really there because you want to see them. Curve fitting, basically.
So what does he focus on instead?
2 core, relatively simple strategies. Trading based on support and resistance levels and using the VWAP indicator.
Okay, let's break those down. Support and resistance first. What are they?
Okay, so support is basically a price level where a stock has tended to stop falling and bounce back up. Think of it like a floor the price respects.
Buyers step in there.
Usually, yeah. And resistance is the opposite, a price ceiling where a stock has tended to stop rising and reverse downwards.
Sellers take control.
Exactly. So the strategy is, first thing in the morning, you identify these key support and resistance areas for your chosen stocks in play.
Right.
Then, let's say you're looking to buy. You watch the price approach a support level. You look for signs of indecision, maybe one of those thin candles, ideally happening on high trading volume right around that support area.
A sign the selling pressure might be drying up?
Precisely. That's your cue to buy. And critically, you immediately set a stop-loss order just slightly below that support level, usually based on a 5-minute chart.
The 5-minute time frame is key there.
For day trading, yeah. It helps you react quickly to define your risk tightly. If the price breaks convincingly below that support on the 5-minute chart, your stop loss gets you out automatically, limiting the damage according to your 2% rule.
Got it. And how long do you hold the trade?
Typically, you'd aim for the next level of resistance as your target to sell, or maybe the next support level if you were shorting using the resistance strategy, which is just the mirror image.
And can you take partial profits?
Absolutely. Aziz suggests an option. If there's another obvious resistance level further up, you could sell half your position at the first resistance level, lock in some profit.
De-risk the trade.
Exactly. And then move your stop loss on the remaining half up to your entry price, so it's a break-even trade at worst, and let the rest run towards that second target.
Smart. Okay, that's support and resistance.
Yeah.
What about VWAP? You said Aziz calls it the most important technical indicator. That's a bold statement.
This is a strong claim, yeah. VWAP stands for Volume Weighted Average Price.
Volume weighted. Okay.
So, unlike a simple moving average, VWAP takes into account the volume of shares traded at each specific price point throughout the day. This makes it generally a more reliable indicator of the true average price where most trading happened.
So volume gives it more significance.
Huge significance. Aziz says it's pretty much a must-have on any serious trading platform. The basic read is, if the stock price is trading above the VWAP line, it's generally considered bullish. Buyers are in control on average. Below VWAP, bearish.
Simple enough. How do you trade it?
Well, similar to support, you look to see if your stock in play is showing respect for the VWAP line, maybe bouncing off it.
Using VWAP itself as a dynamic support level.
Exactly. If it holds, you might buy slightly above the VWAP, and again, you immediately set a stop, maybe a trailing stop this time, slightly below the VWAP.
A trailing stop. How's that different?
A trailing stop automatically moves up if the price moves in your favor, locking in profits as you go, but it still gets you out if the price reverses and breaks below VWAP on, say, that 5-minute chart again.
Okay, protecting profits actively. And the target.
Similar idea. You'd aim for the next level of resistance, maybe a key whole dollar level like $22 or $23. And again, you have the option to sell half near resistance, move your stop to break even on the rest.
And presumably you can short sell using VWAP as resistance too.
Yep, mirror image strategy works for shorting if the price is consistently staying below VWAP and respecting it as resistance.
So the big takeaway from Aziz on strategies seems to be keep it simple.
Absolutely. His core advice is pick one of these strategies, either support and resistance or VWAP, and practice it relentlessly. Master it in a trading simulator before you risk real money.
Don't try to juggle 10 different complex patterns.
No. He argues that not overcomplicating the technical strategy allows you to dedicate more mental energy to the really crucial part. Managing your psychology, executing your plan flawlessly, handling the emotions.
That makes a lot of sense. Simplicity frees up focus for execution and the mental game.
That's the idea. Focus on execution and mental strength, not getting lost in endless analysis.
Okay, great stuff. So just to quickly recap the core pillars we've pulled from Andrew Aziz for you listening. First, intensely focus on identifying those stocks in play, the ones with high volume, a real catalyst, and trading independently.
Yep, find your battlefield.
Second, live by the 2% rule for risk management. Protect your capital above all else. Live to trade another day.
Absolutely critical for survival.
Third, learn to read the market psychology through candlesticks and pay close attention to the volume cues. Understand the battle between buyers and sellers.
Read the tape, essentially.
And finally, master one simple, efficient strategy, like trading support and resistance or using VWAP, and practice it in a simulator until it's second nature. Don't overcomplicate.
Simplicity and mastery. And you know, the book uses this really powerful analogy. It says learning day trading is a lot like learning to ride a bicycle.
Oh, yeah. How so?
Once you've truly mastered that skill, once you know how to balance and pedal and steer instinctively, nobody can ever take that skill away from you. It becomes part of you.
I like that. It comes in intrinsic ability. So that brings up a final thought. Maybe. If Aziz is right, and simplifying the technical strategy allows you to focus more on the psychological aspects, what does that really mean for success? If the charts and the rules become almost second nature, like riding that bike, then what's the real internal challenge? What does it truly take deep down to manage your fear, your greed, your discipline, day in and day out, especially when facing those inevitable gains and losses? That mental fortitude? That seems like the real final frontier, doesn't it? Something to really think about.